However, silver has recently emerged. As far as we can tell, 44 is the next upside goal. Looking at the silver monthly chart, I get the impression that we're in a nice spot right now, where the price of silver might spike and go all the way up. As for silver, I believe we can reach $49 to $50 per ounce. A blow-off phase and higher shots are possible in my opinion. 14 years ago, around this time, this month or something, we were certain it would reach beyond 50. When it breaks over 50, it will lurch higher, then return to test 50, and then likely move to 100. I think everyone is aware of this, but the point is you feel like, who gives a hoot? Seriously, what the hey is the big deal about 41 to 100? The current decline in gold prices is more of a pause following a tremendous spike, according to market strategist Christopher Mullen. This suggests that the metal is not weak. Money seems to be moving between miners, silver and gold, he said, with silver displaying the most speculative upside at the moment. He predicts that silver would soon reach $44 per ounce, and then make a dramatic surge to $49 to $50 per ounce. A recurrence of its meteoric rise just before the last financial crisis, followed by a precipitous 60% drop. The significance of timing asset rotations was stressed by Vermeulen. He implied that he would seek to lessen his exposure in the event of a more catastrophic stock market crash, even if gold may still rise another 10 to 20% as equities weaken. Gold has a better track record of retaining value than equities do during sell-offs, but even it can experience significant pullbacks when investors are forced to sell even their most extensive holdings due to margin calls. Traders need to be agile because of this interaction, he said, because mood changes so quickly. Regarding the bigger picture, Vermeulen mentioned the long-term outlook. According to the monthly chart, gold has been showing a strong multi-year rise, which puts it in the top tier of assets for performance over time. In 2007, he said, gold was similarly strong before a big financial reset. He next turned his attention to stocks, noting that the S&P 500, as tracked by the SPYETF, has recovered significantly from its 20% drop earlier this year and is very close to reaching new highs. According to Vermeulen, these trends indicate that although short-term volatility is unavoidable, gold will continue to play a crucial role in navigating the upcoming market cycle. Please hit that like and subscribe button if you enjoyed this video and want to receive more updates like this one. Our in-depth analysis of the factors influencing gold, silver, and the global financial markets will remain unchanged. Much obliged for your time. No, all we can do to examine gold is look at the 30-minute chart covering the last 7.5 days. After a significant move, like the one gold has experienced, it's natural for things to take a break. In my opinion, it is not weakening. It has had an incredible run and is simply taking a break. She's worn out. All it is a little profiteering. Consequently, we are merely trading sideways and a small bull flag even when we examine the daily chart, which is quite comparable. It's prepared to soar. In fact, it might burst into action during the next trading session. Therefore, I believe that the precious metal miners are currently being chased by money. The gold market is pausing. As a result of its recent good move, money is flowing out of gold, and now it's making its way into the world of gold and silver miners. They are clearly reaching out and elevating themselves. We were SILJ for a long time. Our 20% goal was just met yesterday. That position has been closed out. Moreover, I believe that the miners may now halt for a moment to catch their breath. We return to gold as funds flow out of miners, who have taken a cut. Additionally, gold has this little pause. And now the price of gold is certain to skyrocket. They will likely enjoy riding one another's coattails, in my opinion. It circulates recursively through the mining industry, into gold and back again. In my opinion, it is the way things will pan out. Yes, we do in fact own both. Silver miners was where we were. We have successfully closed the gap since we have achieved our maximum objective that aligns with that plan. We remain bullish on gold. Both of them really belong to us. Simply said, you have no idea which one will perform better. On top of that, they're essentially the identical play. Therefore, you have the option to take advantage of both, divide your capital, or choose one. However, the fates of miners and gold are always in a state of flux, so I'm partial to both. The biggest victory rate, in my opinion, is with gold. The majority of the time, it succeeds when a deal is prepared. Having a sure bet, there is something I really like. On the other hand, miners are more of a gamble. Is silver an option? Look, we haven't traded silver for gold. In fact, the silver miners were our main players in the silver market. Thus, silver's rallying performance is very comparable to that of gold. The price of silver has recently shown a bullish trend. I'm pausing it. The silver market is so exploding and beginning to run. So, it seems like miners are starting to pour money into silver now. After that, I anticipate it will seep into the gold market, for the simple reason that silver's value is far higher than gold's. The money will likely travel around from miners to silver and gold, and then maybe back again. These movements are delicate and subtle. However, silver has recently emerged. As far as we can tell, 44 is the next upside goal. And looking at the silver monthly chart, I get the impression that we're in a nice spot right now, where I think silver may go all the way up and spike. Furthermore, I believe that silver prices could rise to $49 to $50 per ounce. A blow-off phase and higher shots are possible, in my opinion. Quite comparable to the strong parabolic move that occurs near the end of a move. If a move goes up, you shouldn't put your faith in it because in most cases it will go down again. Not dissimilar to the events leading up to the previous financial catastrophe. After a rapid ascent and then rapid descent, it subsequently sold off for 65%. Therefore, I believe there is room for it to go even higher. Naturally, that's great news for the silver mining industry as well. The catch is that a turning point is approaching. On top of that, I prefer not to hold anything when the tide turns. Gold, whether in its actual form or as an ETF, remains my favorite investment option. In my opinion, there's a lot of room for improvement here. I still see a 10% to 20% upside, maybe even more. Additionally, I believe that bonds, such as TLT, would be a solid investment due to the 1-year holding period. As a result, bonds could materialize and commence a commendable ascent. It would be good to sell gold eventually. The stock market will inevitably roll over and gold will likely follow suit and pull back in price. The value of gold, however, tends to remain rather stable. Its decline is less severe than that of the stock market. Accordingly, I propose that gold and bonds serve as such plays. With a gun pointed at my head, you could force me to purchase and hold, and those are the two things I would likely do. Gold is usually what we see. The stock market may reach its peak and then drop by 10% to 15%. Still, gold is adding another 10% to 20% to its price. A bear market does occur though, if a certain degree of stock market decline causes individuals to become extremely afraid. Then gold is usually out of the question. Even people with good positions like gold sell off because to the excessive selling, margin calls, and anxiety. Thus, gold will inevitably experience a brief decline in price. However, this is typically temporary. Only when there is a massive selling frenzy does gold fall in price. Its market life may be limited to a few months. Additionally, it will discover a bottom manner prior to the stock market. A bear market can affect gold just like any other asset. However, in 2007, a scenario extremely similar to the one we are in now, it managed to rally. Based on historical data, current dollar strength, and gold stock market performance, the stock market might see a sell-off or peak at any moment. Additionally, gold continues to rise by another 20% plus. That is why, for now, I am partial to gold. I can see a couple of major currents. Taking a step back and examining the larger view could be useful. In my opinion, the stock market is becoming quite choppy. We can see the larger picture and prioritize gold if we examine the charts. To sum up, I'll simply refer to the monthly chart for gold. For the past few years, gold's price has been skyrocketing. Overall, it's doing better than expected. Over the long run, it's shaping up to be a top performer. Prior to the 2007 stock market crash and subsequent financial crisis, this occurred once again. Gold acts as a worldwide barometer, in a sense. Similar to the way beehives think about Earth and its inhabitants, Everyone is on edge because they think something bad is going to happen soon, and they usually go for gold. They depart from equity to a certain extent. They stop dealing in money. Even real estate is a target of their flight. After then, people start to prioritize gold. Something tangible, unrelated to the banking system, is what they desire. People are getting ready for something terrible to happen, and gold is a sign of that. Which one is it? We have no idea. When something bad will happen is anyone's guess. Additionally, fads will shift. Things will change in the economy. However, gold is currently seeing a surge. Plus, it's far more effective, and it's growing in a positive direction. Be wary of the stock market because of that red flag. However, if we narrow our focus to the stock market as a whole, I'll show you the SPY, an exchange-traded fund that tracks the S&P 500. Clearly, we've had a fantastic recovery from this year's lows. We experienced a significant drop of over 20%. The markets have just reached new heights. Furthermore, individuals are investing in this market up here. E.B. Tucker, an investor in precious metals who has been tracking the market for a long time, has come clean about his lack of enthusiasm about silver. He expressed doubt about the enthusiasm around silver's recent price recovery, stating that even if it surpasses $50 and reaches $100 per ounce, the return would be less attractive than speculative tech companies, which have the potential to increase tenfold. Nonetheless, Tucker did concede that the system of monetary price controls is starting to crumble, which could lead to more price volatility for silver. Regarding gold, Tucker brought attention to its strong surge to $3,600, implying that a significant portion of the surge was a precursor to significant disturbances in the financial system. In 2008, for example, gold surged to $1,000, months before the financial crisis fully unfolded, as he pointed out. Tucker warned against getting too attached to certain price targets, even though predictions of $4,000 per ounce are intriguing. He argued that worrying about the precise amount of gold is unimportant, and that what matters most is simply holding it. The interview can wait. Personally, I'm not a fan of silver. Over the course of the weekend, I scoured the area in search of the silver. Not even half of everything has been located by me yet. All of this material is too big to store. This is excessive. You seem to have misplaced it. I've done real estate sales, and I swear there's a 1,000-ounce bar stashed away somewhere in the basement. All this material is too big to store. What baffles me is that the price has essentially recovered to its summer 2011 level. You were at a point 14 years ago, this month or thereabouts, when we assumed it would easily exceed $50,000. Once it surpasses $50,000, it will leap upward, retest $50,000, and likely reach $100,000, as is well known by everyone. You seem to be asking, who gives a hoot? The difference between $41,000 and $100,000, what's the big deal? In the newsletter, we discussed flying taxi stocks, totally for fun, incidentally. This isn't something that we're actively pursuing. This stuff goes like 10 times the speed of light. Some folks are completely obsessed with silver. That's the only thing it will accomplish. Approximately 300 or 400 pounds of silver will be mine. Putting this thing somewhere is an impossible task. You should definitely have some. For as long as I can remember, commodities financing was the main factor that blocked that market from going up. That is currently malfunctioning. The capacity to manipulate prices is what is failing. They're few. Anyone can own them. You can fit all of them onto your fingers. It's as if there aren't many, they're small, and the same individuals operate them all. In my opinion, when you play this, you do it merely because it is available, but you must not become obsessed. My fascination in precious metals began when I was a kid, and I was explaining that to my kids. What I accomplished in order for others to comprehend this? I feel like people just assume I'm wealthy because of my birth. I did, however, purchase a small amount. I am reviewing the purchase dates of all the items I purchased. I would simply go out and purchase a single gold coin for $650 or some such amount within the next month or two. This happened over 20 years ago. Nothing along the lines of, I'm going to become rich or similar. It was as if I had been fighting an uphill battle. Never again will I have to fight. A lot of individuals need to take a hard look at how they think. For some reason, they've decided to retire and purchase 10 ounces of silver. I highly doubt it. Regrettably, I believe we have only achieved this run temporarily. In all likelihood, this is a respectable run. It seems to me that some elements are being adjusted somewhat.